Dano, this live stream is up. If you wouldn't mind posting that link all over the place. I'm not sure which link to post, so I don't want to post it. Come on now, stay over here, camera, so everybody can see. There we go. And we'll make sure we white balance that camera so you can see me on it. That should work. All right, traders, we are just waiting for my OMNIX to show up at the live stream. We also have a chat room, which I'll pop out so we can chat with one another. And there it is. So we've got the chat room, which we can converse with. And we'll just wait around for a couple of OMNIX to show up, and I will get started. I hope everyone had a great weekend. This is a Fed week. Things are going to get crazy. You'll see. There's going to be action, action, action. We have not moved rates in quite some time. This is an actual move that's going to take place. It's going to get interesting. Chat is open. All right, a couple of more moments. I see people showing up now. Hello, hello. We are doing some live streaming out there, kids, if you want to join us. Mr. Tipton. Dan, if you wouldn't mind, can you put the link wherever it needs to go, social network, wherever you can send it, put it in the room, try to get people out? I didn't really make an announcement about doing live. I just went live. Okay. OMNIX, are you there? If you're there, please let me know in the chat room, and I will get started. The YouTube chat room. So my setup and what I'm looking at is different from yours, so I can't tell you where to find that chat room. But I know there is one, so make sure you go in there and say hello to me. Herman, how are you? Mr. Dacey. Hey, Ben, thank you for showing up. All right. Are we ready? Are you cats ready? You want to take a look at some of these charts and see what they mean? Hopefully where we'll be going after the Fed speaks. Well then, let's start with this. Good morning, good afternoon, and of course, good evening, traders from across the globe. You know, this is a real cowbell that I got from the exchange in Chicago, I don't know, 25 years ago. When I went down there for some crazy event and they were opening up a market and they gave out these cowbells. It's real, it's authentic. On the trading floor one day, Prudential Base was giving out gold bars. This has to be 25 years ago. They gave us each one of these little, it sits on my desk till this day. We got our little bobblehead from the trading floor, a real authentic bobblehead from the trading floor. Although he carries a Jets football, but that's personal. Go Jets, huh? They won a game. Jets won a game. The Jets won a game. You know, when you're a Jet fan, it's like winning the Super Bowl. You know that, right? It's like going to every Disney park in the world at once when the Jets win a game, because it's rare. It's a rare occasion for a Jet fan to be happy. So we'll make sure that we're happy for this entire week because I don't know if I'll be happy next week. It's the Jets. Love them, but it's the Jets. Interesting thing before we get started about the Jets. It's got to be one of the most losing teams or less winningest teams in all of football. And I've got friends that are on a waiting list to get season tickets. They got to wait 10 years before they can even get to a spot where they can get season tickets for one of the most losing teams in history. Talk about us being diehard Jet fans, huh? Go Jets! All right, so let's go to work. Futures trading, stock trading, everything. I'm talking ETFs, stocks, commodities, same day expiration options, crypto. If you trade it, it's got risk. Risky, risky, risky. So never trade without putting in protective stops to help mitigate that risk. You'll live a lot longer in this business if you heed that warning. OMNI S&P Daily Bar. Traders, we were starting to drop. The world was getting nervous. Every TV station was talking about Powell has missed the boat. The Fed's behind everything. Forget about a soft landing. We're now looking at a crash. Can't believe the Fed didn't see this coming. And I came out with the video and said, hold on, everyone. This makes no sense. A, we're about to lower rates. That doesn't make markets go down. B, the charts are telling me that we're simply in an inverted head and shoulders. And once the right shoulder resolves itself, we'll exit the shoulder and go. Because that's what happens in a bull market when you create an inverted head and shoulders. We had inverted head and shoulders here. You've got the left shoulder, the head, the right shoulder. And what did we do when the right shoulder went down and resolved itself? Boom, we exited. So I put this out and said, listen, this is the same thing. Once the right shoulder is resolved, we will exit right out here, just like we did there. That was when I put this chart in front of you, and here's what's transpired since that day. I mean, am I not good at this or what? Kids, who can do that? Who can read charts like this? I don't know anyone who can. And I don't make this stuff up. I literally just reiterate the stuff I've learned in the past because repetitive patterns are the cornerstone to proper technical analysis. That's a repetitive pattern until it stops repeating. I'm not playing genius. I'm just literally using my eyes. You know what I mean? Not so difficult. Now, of course, we're traders. We put our stops in every day. We would never sit around and let this break through that circle and keep on going. But we do expect that patterns repeat because a good analyst looks for patterns, finds them and stays with them without question till they stop working. So that's all I did here. I mean, I showed you a pattern. Plus, the Omni was getting bullish, and when the Omni gets bullish, so do I. So this is what happened, and that's truly amazing, right? So that's where we are with the E-mini S&P, and it looks to me like it went right up and got ready to exit that door like it did over here, and the Fed within 2 days, today's Monday, so Tuesday, Wednesday, are going to lower rates. Now, I will tell you this. I have been involved with markets for 43 years. I really pay attention more than the average person. All of you Omniacs know that. I am on this 24 hours a day. In my 4 decades plus, I have never, ever seen a moment where the Fed lowers rates when the market is making new highs. Never. It's never happened in my lifetime. It doesn't make any sense at all in the world that you would lower rates when the market is making all-time new highs. You lower rates when something breaks, like 2008-9, a mechanism breaks in the economy, a major geopolitical event that we can't control wrecks the economy, like COVID. You lower rates. You know when you don't lower rates? When you're making all-time new highs and inflation is dropping? I don't know. You know what I mean? The Fed's going to lower rates, whatever that means. I'm not 100% sure. Let me move this camera if I can. I don't know if it's going to let me. Let me see if I can move this camera so that you can see both sets of inverted head and shoulders. I'm going to try to get to my program. All right, it'll let me. Let's do this. You see those are both sets of inverted head and shoulders, right? They don't look exactly the same, but this is an art, not a science. They're not supposed to look exactly the same, just similar. They both look similar, wouldn't you say? I think the head on the first one to the left is a little longer, but that's about the only difference. Sorry, that was an alert. No big deal. Let's go back to the chart. No, we're not going to go there yet. We're going to go here. Oh my goodness, I got so many good charts to show you, but let's start here where we were. So as you can see, so this head took a little more time, but that doesn't make it not an inverted head and shoulders pattern. Right? They don't have to be identical, and the shoulders do not have to be congruent. They don't have to be even. It's just going to look like a head and shoulders. In fact, these circles have no meaning at all whatsoever. I just leave them there so that you can see clearly what I'm looking at. There's no measurement. The circles mean nothing at all. I just put them there. So don't think that this circle is not as big as that and this one. It's got nothing to do with nothing. I just make it look pretty. What we're looking at are the formations of those daily bars, not the silly circles I put around them. But the circles do make it kind of clear what I'm trying to show you. So now let's move this back, the camera, and let's go look at some other stuff. So that's the E-mini S&P. Now we also looked at Nasdaq, which should be on this same chart. And in the Nasdaq, if you recall, we can remove all these bars. I'll just do that for you quickly. We were down here, and I was crazy enough to tell everyone, well, here we go again. Don't get so worried because it's not very scary down here. As soon as we hit the 200, we should hold again. Maybe you get through it like it did over here, but you should end up holding and moving back up. And I drew the pennant, which is right here. And everyone has seen this before. It's not a new chart. You guys have seen this in all my recent videos. So I drew the pennant in place. I don't really want to make the bottom line too thick because it gets in the way, but I'll do it anyway. So now the bottom line is in. You've got your pennant. And then here's what happened. We hit the 200, went through it a little at the top of the pennant. All right. This about to lower rates. Wouldn't that make this little bull flag looking thing go through the pennant and move higher? I think it should. Now I will tell you this about what happens. First reaction is not the correct one. When they lower rates, usually the first knee-jerk reaction, no matter what the market that you are in does, it's almost not the right reaction. What happens is this. You get that reaction, right? The second one. So, when the Fed does come out, it's the second move that we'll need to pay attention to. There's going to be one. They're going to do a rate cut. The markets are going to go crazy. Let that end. Whatever happens after that will be when people made sense of what's going on and companies got together and had a quick board meeting to decide what that meant, and the next move will make more sense than the knee-jerk reaction that will take place when the Fed first moves rates. So keep that in mind, okay? That first reaction you don't want to be part of, just stay away. Now, I did mention to everybody that I've always professed the news comes out in the charts first all last week, and I would show you that it would happen, well, the week before, 2 weeks ago, and last week it is exactly what happened. I mentioned, doesn't matter, geopolitical events, presidential debates, you name it, the OMNI's offering buy signals, and we're taking them, right? That's what we looked at. That's when the markets were crashing. It was absolutely correct. That was the perfect call. I kept everyone with my videos in tune and ready for the upside, and the upside is what we've seen. So that's just technical analysis working on all 12 cylinders. No magic going on here, kids. What else? We also have this. When you've got, let me label this for you. I'm sure I've got it labeled elsewhere, but this will work. When you've got T-bonds moving up in this direction, and you've seen this in many videos, you've got interest rates moving in the opposite direction. When T-bond futures are moving up, automatically, here, let's do this, automatically interest rates are moving down. Now, the Fed, Jerome Powell, does not have to say a word. Banks move the rates because that is inherently what happens. When T-bonds go up, interest rates are dropping. T-bonds are going up, interest rates are dropping. We're at a spot like, let's see, is it on 12? We're at a spot like this in the Dow. We've just made an all-time forever high, never been seen in the life of the Dow, and we're about to lower rates? What planet are we on? What planet is this? All right, so there are other countries where you do have to lower rates, right? In fact, let me just read this one to you. It's very quick. It should be right here. Here's a quick blurb. A country that should be raising rates or doing something with rates, but certainly in a different position. Okay. Russia pushes key interest rate to 19%. Okay. If you look at the state of their economy, the war they're in, what's going on over there, yes, they should be messing with interest rates. When you look at the shape of our economy right now, with making all-time highs in the stock market, inflation dropping, why are we lowering rates? I'm just flabbergasted. But hey, thank you, Jerome. We'll take it. We'll take it. We'll take it. It's only going to help. Tim writes, last week, every break was quickly and aggressively bought up, so the market is disappointed with the 25 basis points. Tim, I don't understand that at all. We don't need to lower the rate at all. Lowering the rate can only be bullish. In the end, don't care what the first reaction is. Lowering the rate can only be bullish. We're not lowering the rate to fix a big issue. That, a quarter point, wouldn't be enough. We're lowering the rate because, I don't know. I don't know why we're lowering the rate. If I was on the board, I'd hold Jerome by his feet before I'd let him go. I'd put my arms around his ankles and hold on to him. He'd have to drag me to get to that podium to tell you guys he's about to lower rates. But I'm not on the Fed board. Like, they're much smarter than I am. What do I know? But I know from my 43 years, I wouldn't be lowering rates right now. I'd wait for an issue. Anyway, mini Dow or the Dow itself, doesn't matter which one we look at, they look the same. New time highs. Bonds going up, pushing down interest rates. The dollar, let's see, that should be here too. Now, let's go with Z dollars. We've rolled over to December. Oh, my goodness, look at how bad that looks. You know, let's get a prettier look. Let's go with the DXY. All right, so at least we have a full chart. This is our dollar index, right? Down, 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 we've been going. I'm just using this as an illustration. I'm not trying to draw a channel, but just to illustrate. All right, we've been going down. But you must understand, the dollar would be at par, would be worth $1 down here. All right, so let's just put this line here. The dollar would be worth $1 if it was all the way down here. We'll darken that line for us a little bit. So that's par. That's 100. That's the dollar being worth $1. It's still worth more than $1. And I promise you that the dollar being worth more than $1 is not a big issue. It looks a little troublesome looking at the chart, and absolutely, are we looking at a bear flag? Yeah. Right? You got a bear flag right here. Let's yank this out of the way for a moment. We know we're in a bear flag. We're in a bear channel, and this thing is going down. But I don't think that that hurts us at all. And they're lowering rates. When they lower rates, the world needs less dollars to buy less American stuff, because something like Russia's got 19% rates, and maybe you're crazy enough to go buy rubles instead and get that 19%. Or any country that has a higher rate than the U.S., sovereign funds sell off a few U.S. dollars, buy that currency, and buy their interest rates. So you need a few less dollars when you're lowering rates, and it's showing up in the chart patterns. So that's a bear flag on the dollar index. We'll write it in. Let's go to caps here. So this is it's a bear flag that we're looking at. We'll give it a little pointer so I can illustrate. All right, boom, bear flag, which usually ends up pushing the market lower. Now you can really drop this line here, you know what I mean? It hits way more bars here. Usually this means the market ends up going down. Now we know this to be a fact because bull flags mean the market usually ends up going up. Bear flags usually mean the market will go down. Dollar index in a bear flag, right? And this one is DXY. Let's be accurate. So dollar index daily is in a bear flag. Now, how about a market like this? Dollar index is in a bear flag, and isn't it interesting how gold just broke out of a bull flag? Which, guys, you traders, you must remember this bull flag. I showed it to you when none of these bars existed, right? We were way down here and started preparing everybody for what would transpire. We were right there. And I said we either bounce off the bottom and go through, or turn around and go straight up, but that's probably what happens next in gold because it's a flag, not because I have a crystal ball, and bull flag worked. So if we go back to where we were, that was chart 12, why shouldn't the bear flag work in the dollar? So probably we're going to go lower in that dollar. When that happens, it pushes things up like metals, you know what I mean? Silver, gold, sometimes the grains, just depending upon what the grains are doing as far as temperature-wise, you know, right? The weather, the growing, how much has been planted, how much has been harvested. All that stuff has a lot to do with grain movement, whether the dollar goes up or down. In fact, right now you've got dollars moving down, and at the same time, you've got tons of grains moving down too. Soybeans, right? This is soybeans. It's been moving down for some time. Corn, down with the dollar, but these things happen when there's abundance of it. Wheat, usually wheat will rally nicely when the dollar goes down, but wheat's just fallen out of a big head and shoulders formation and went down, created a bear flag. That worked too. Boom. All right, so nothing major bullish going on in markets, even with the dollar going down, that are priced in dollars. That just shows you that we're basically at a very good equilibrium place right now, where the dollar, every tick the dollar makes doesn't make markets go crazy. It's all kind of floating around at equilibrium, from what I can see anyway. Any questions, cats? I just wanted to show you a few charts and keep you in tune with what's going on. Remember that I also showed this chart to you 2 weeks ago. This is a weekly. When we were down here, and I said, you know, it's not so scary. It just bounced off of an average, or it should bounce off of an average that holds. It's been holding since the beginning of the year. Well, it sure did bounce off that average, and it's gone up a lot. In fact, all-time forever highs is right here, and S&P is right there. So, not so scary was the proper statement to put on this chart 2 weeks ago. Showing you the inverted head and shoulders was absolutely the correct formation to show you. And OMNI has been getting bullish on the way up, so all of that fits for me. Traders, if you would like to hang out with me further, I do these lives for a little while, and then of course I go back and stream in my live trading room where I'm always at. You can join me there if you'd like to. So what are you saying? Do you think Nvidia will find its legs? Oh, come now. Have you been watching these videos? Let me see if I can show you if Nvidia will even pop up. I've got a bunch of different ones. Some of them make no sense because they're old charts, and others are perfect to show you. So let's see what we have. I don't know which one it is, kids. I'm going to have to bounce through these. Let's try this one first. That's not going to be it. That won't do us any good. It's just an old chart with nothing on it. Come on, Nvidia. One of these has to be right. One of them my kids play with, so it won't make any sense at all when that comes up. That's not going to be Nvidia. Is it this one? We'll do them one at a time until we find the proper one. That's not it. It was a white chart. So it's going to be the last one. Should have went there first. Oh, that's not it either. Where's everything? Where's my Nvidia charts? This doesn't make any sense. Kids, I don't know where my Nvidia chart is. Let's pull up a fresh one, and we'll do it fresh together. Can I do it from here? I don't think I can do that from here. Let's just take a look. No, I don't think I can do it from here, so let's go here. open. We'll just bring up a fresh one, right? Let's make new. We'll do this together, kids. New. No, that's not going to come up right. Let's go to Nvidia.o, which would be a better chart to look at. Okay. Symbol. Nvidia. Where's ordinary shares? There's no .o. There must be somewhere. There we go. Now we're going to do this correctly. Get rid of this. Get this involved. Let's get rid of some of this, which doesn't mean anything. Yeah, we'll leave that one there because we'll have to change averages. All right, so this is Nvidia. I'm going to make it a little fatter, make the bars a little thicker so we can have some fun with this. Yeah, it's a little too thick for my eyes. How about that? That's prettier. All right, so we've got Nvidia. We're going to take this average and turn it into the proper one. And on Nvidia, was it like the 100? I had maybe the 112. I had a very interesting Nvidia average. No, it's not that. Maybe the 120. We're somewhere up here because it's a new chart. I don't remember which average it was. It's the 150 maybe, or the 172. It's one of those crazy averages. Yeah, 150 will work. So, you've got this average on here, right? 200 we won't worry about for now, but we've got the 150 average, which is the average I was showing you in all of my videos leading up to this one today. Make that average a little thicker as well. So, Nvidia, and we will label it. All right, so what we had was a situation. Would you please calm yourself down, telephone? Let me shut that noise off. You know, I should DND the phones too, because you know they're going to ring, kids. Live is live. All right, let's do that to the phones as well. DND. All right. So we got the 150 ball moving average. When we looked at Nvidia last, we looked at a situation where I said we're here, it held so well here, and it held so well here, we were up here. I said to everyone, Nvidia, let it drop. Let it just drop to the average. Wall Street's watching. They will come in and buy it at that average. So we let it drop from here, and look what they did. I mean, right at the average, Wall Street came in and jumped all over it. So what do you really have? Bigger picture is you've got the same look here that you do in the Nasdaq, which makes sense. This is a big piece of the Nasdaq, and that is it's building a pennant. Right? And then the bottom line, of course, you would drop it in here. And wherever this ends up going, it's building a pennant right now. So, not only is it building a pennant, but look at where the average and the pennant comes in. Let's change colors here. Make this easier for you. Let's do it like that. See where the average and the pennant come in? Wall Street's always want what to watch for. And then you'll know when they are going to change their minds and buy or sell. So I've been watching stuff like this my whole life, which is why I put it out in videos so you guys see it before it happens. So Nvidia literally was here. None of these bars past this circle existed. None of this, but we talked about let it drop to here. If that holds, you can go in and buy. And that absolutely is what worked. What will happen next, I'm assuming, because they're lowering rates, Nvidia obviously has debt like every other company. Whether you have cash on the books or not, you also have debt that you service. It's just part of running a public company. And if their servicing of debt is going to get cheaper, or at least the amount of money that they need to pay out in bonds to bring in money is going to get cheaper, the stock goes up. All the stocks go up when that happens. So, again, when it comes to cutting interest rates, you cut them just a little bit. All right, so if you own a mortgage, and on that mortgage you see rates have dropped a point, it matters to some people enough to refinance because it saves you money. What if your mortgage was $10 billion? How much money would a small percentage of movement mean to your bottom line? That's interest rate movement and the price of stocks. the smallest interest rate movement makes a huge impact on whether stocks go up or down. So it doesn't matter what Powell does because we're lowering rates in an environment where it's not all that necessary. All of it is bullish no matter what the first reaction is. So if you guys would like to spend more of the day with me, please come here to livewithoscar.com and join me in this chat room because it's live right now. And as soon as I'm done with this stream, I stay here and work in my live chat room. We run that 24 hours a day. The simplest way to find me is just go to livewithoscar.com and it will look like this when you get there. And if you are not a member, you will register. Simple, no credit cards will be asked of you at all. Fill out your name, username, shoot, you got to give us an email. That email then sends an email to you. When you get that email, the one problem that you're going to find with that email is it will likely go to spam. If you really want to join me in my trading room, go to your spam, click that email, grab your password, and join me at Live with Oscar. Once you have your password, right, once you've created your password and you get your email, you literally will come back to here. You will, you'll end up here at livewithoscar.com again. Looks like this before you hit register. Once you've registered, you will hit log in. It will log you in. If you need to put your passwords in, you put your passwords in. It shows the trade that I'm looking to do today, the chart below it, which is my reasoning why I would like to be in a trade today. The arrow, I expect the market to go up into. The trades that we're doing, if you're a member who pays, you'll see them. If not, you'll see that we put out trades. Doesn't cost you anything. You'll still be there. But what you want to do is click Oscar's chat room. When you do that, it will, if I do it, it's going to knock me out, so I got to be quick. If you do that, it's going to take you here, and you will be able to join me in my live chat room. Just like that, you're in, and you'll be able to converse with me. So I hope, hey buddy, I hope you guys join me because the streaming that I do on YouTube, I spend my entire life just living in my live trading room, and you're always welcome to be there. So thank you for tuning in. I hope this helps, and remember, keep your emotions out of trading. How do we do that? We say this to ourselves over and over and over again, and by now you should know what that is. But you know what? Before I get there, I forgot to say one thing. OMNIACs from the UK, OMNICAMP, we on caps, yes, in the UK. I've gotten your applications. Many of you have sent in applications. Thank you so much for them. I will go through each and every application, and you will get phone calls from me this week, but you got to answer your phones. If I can't get through on your international numbers, I will shoot you an email. You've got to get back in touch with me if you want to join me at OMNICAMP in the UK. It's going to happen between October and November, most likely in October, so let's get moving. Go to omnibootcamp.com if you haven't filled out your applications to join me in the UK in person. If you have already filled out your applications, you will absolutely hear from me. If you haven't, please go to Omni Bootcamp and fill out those applications now. I will call you to see if you qualify for a seat where you could join me in an OmniCamp held in person in the UK. Thank you for filling out your applications. I will call all of you. Don't sweat it. You know I'm going to visit the exchange, right? Maybe cats will all come with me. When I get to the UK, I go to the exchange. I do every time I go there. So if you guys want to join me after camp, we'll all go to the exchange. We'll absolutely do that. All right, traders, thank you so much. I will see you all at livewithoscar.com. And remember, stops are in. Emotions are out. Rock and roll, kids. Thank you for tuning in. I will see you all at livewithoscar.com.